Welcome to the Passive Income MD podcast, where we talk about creating your ideal life through multiple streams of income. If you enjoy hearing about this stuff, make sure to hit subscribe. Now let's get on with the show.
Hey everyone, I'm excited for this episode. We're going to be talking to a good friend of ours. This is Austin Dean. He's the founder and CEO of Waystone Advisors, a wealth management firm based in Redmond, Washington. He has probably more designations after his name than anybody else I know. He's got over a decade of experience in helping clients achieve financial freedom through different vehicles, real estate investing, wealth design. He's been recognized by Forbes. He's a sought-after speaker in all of these financial spaces. You might have seen him all over the place on podcasts, on stages, and I'm just excited to be able to talk to him today. We're going to be talking a lot about non-traditional financial planning. I love that term. There's a lot to it. We're going to talk about that today. Austin, how you doing?
I'm doing great. It's good to be back. Thanks for having me, Peter.
Yeah, I always love talking to you. I mean, you always have so many things going on in your life. Why don't we just start there? Tell us what's going on in your life today that you're excited by.
Yeah, so many things. The things I'm excited about. Our team just hit 15 people. We've added a female advisor to our team. We have clients in about 40 states now. We've been discussing with adding some new potential alternatives, adding some new streamlined software to be able to continue to expand how many people we can help and serve and bring, as you said, non-traditional ideas for financial independence.
You're the CEO and founder of Waystone Advisors. Do you mind just sharing a little bit in your words what that is?
Yeah, Waystone Advisors, as you mentioned, it's a wealth management firm. So we are independent, which just means that we don't work for an insurance or investment company, but we have access to the wide world of everything. In case, for us to be able to implement for our clients strategies, that can be everything from traditional aspects like money in the market to insurance policies to we have in-house, we can help with certain types of alternatives and set up the lines of credit and navigate a client's entire financial picture. So we are comprehensive, which goes to that as well. So we're integrating and working with, their CPAs and estate planners and their own real estate and other assets they have. We're also fiduciaries, which is just a funny word that means that we have a legal responsibility to give advice that's in the long-term interest of our clients. And from that, we like to bring a non-traditional approach to how we do that, which we really focus. I'm sure we'll dive into this more on how do we think about money, not in a retirement centric kind of way of how do we have enough when we're 60, 65, but instead, how do we create financial flexibility now so that we can have financial independence to really start crafting the life we want to have now instead of having to wait into the future. So,
I mean, you and I obviously think alike in so many different ways. And when we just started talking about financial planning or finances and future proofing and all this stuff, it's pretty cool. Like we seem to speak the same language, especially since I come from the world of real estate. I know you're very knowledgeable in that area as well as have your own investments. I will say sometimes like when physicians in our world, in our community, when we start talking to the traditional financial planners, they start, their eyes start glazing over and they kind of have a certain way of thinking about real estate and alternative assets. And what I was surprised by when I was talking to you about it was that it seemed like you thought very, very differently about it. In some ways, I felt less judged in a way. That's a funny way to say it. And we started talking about this concept of non-traditional financial planning. So do you mind just sharing with people like what that term means to you?
Yeah, for me, non-traditional is, I guess maybe the easiest way to define it is defining traditional at first. So as you and I have talked before, like when I got into the industry, I, for better, for worse, I was early 20s. That's part of why I got all of my designations. Through that process of training and really, absorbing all of what I characterize as the traditional model of wealth building, I realized that the traditional piece of let's save as much money as we can, primarily in the stock market, and in that, it's primarily in retirement accounts that defer taxes, defer our ability to access that. And one of the things our team talks about, and a lot of doctors we work with talk about how traditional advice invites you to put money into money jail, puts you in places you can't access your money until you're 60 plus for the most part, without potential penalties and taxation. And me being early 20s realized, man, I don't want to put all my money in places that I can't access till I'm 60. That's 40 years away. So I started diving into and figuring out what are the different ways to do money. What do the most wealthy do? And what I found is that the most wealthy tend to go and they start businesses, they build and buy businesses, they invest in real estate, they have a healthy understanding of debt as a tool, they invest in assets that are more flexible and leverageable, they give them more control, they prioritize creating cash flow so that their money is always doing multiple things at the same time and they can continue to build. So I started very quickly saying, man, I would rather do that. What are the types of assets that we can build that give me more control, more flexibility? How do alternatives work? Whether that's real estate or private lending or oil and gas and all those different pieces. And over time, we've continued to expand the resources we have and the philosophy around that to be able to bring to whether that's doctors or other high income earners a different path towards financial flexibility that is not in that traditional world.
Yeah, I mean, I think that a lot of people, when they approach a lot of those, what they consider non-traditional, or at least we've been fed that it's non-traditional in a lot of ways, that it seems intimidating because it doesn't seem to be common knowledge or the common thing that people do. So, I mean, oftentimes like real estate, some of those alternative assets that you talked about, certain commodities, oil and gas, certain other opportunities, that it feels kind of like outside the box. And so there's some hesitation for people to learn about it. In fact, there's a little bit of fear. And so how did you get over that initial kind of bump yourself to learn about all these different asset classes and different ways to invest?
That's a great question. It's a slow process of doing a lot of due diligence, a lot of interacting with different groups. So it started off like most people who get into alternatives, a few different mistakes. Luckily for me, there were small ones. Put my own money into a couple of small syndications and REITs, and a couple of those didn't quite turn out as well as I wanted it to. But for me, I looked at that and said, okay, it doesn't make that a bad asset. What is it that I missed when I was doing my own due diligence? And then I started diving into learning how do we assess those. First off, what is the risk associated with that, and can whoever, whether it's me or whether it's our clients, can they absorb that theoretical risk associated with alternatives that are maybe less liquid than a traditional stock market type asset, right? I started vetting with actually meeting with the owners and operators of investments, asking for audited financials, asking them about what are their exit strategies, getting a full understanding of how long is this locked up? How do I what are your mitigating factors for if interest rates go up or the market collapses, or how does this work? And internally we have quite a few check boxes that we go through when either assessing assets that we want to bring to clients, or even if a client brings us, says, hey, I'm thinking about investing in this, how does this work? And then we have the ability to say, in your situation with your goals, here's how we would want to think about that asset within your plan. So building a system of check boxes, and then eventually actually just jumping in, putting my own money into it, seeing how it works, and allowing that to create a more realistic, a more real interaction with those investments, so I could understand not just book knowledge of how they work, but in application.
I mean, I think it's fascinating because you basically tested it, learned it yourself, and you're able to bring that to the community and bring it to your clients. I mean, why do you think so many are kind of, especially in your world of financial advising, maybe they're a little bit resistant to going down that non-traditional path? And what has allowed you to do that? Because I think obviously it almost would have been easier for you to stick to a traditional route. But I think that's what sets you apart. And I think that's how we got connected, because you do think a little differently. And so like, what allowed you to go down that road?
I think part of it is personality. If I'm being honest, I've always been somebody who, looks at and questions, is this the best way to do it? And then kind of casually pokes holes. I mean, one of our core values as a company is we're relentlessly unsatisfied. Like, we never want to assume that we've found the thing that's the best and assume that that's always going to be the best. So with that in mind, I mean, everybody's situation is so different and unique. Being able to step into somebody's situation and say, how do we solve this? And viewing it, I mean, a lot of how my brain works, and then by extension, our advisors on our team and the philosophy we've created, is we see it as this kind of really beautiful and important puzzle, saying your unique situation, if the traditional model doesn't get you where you want to go, what are the other options? And I can't tell you how often I have, whether that's doctors or other high income professionals that come to our team saying, hey, we've been saving all of our money into retirement accounts, but we're in our 40s or early 50s. We're feeling a little burnt out and stressed. We want to be financially independent in the next 3 to 5 years. How do we do this? And that requires having an advisory team that can rethink, I mean, conceptually, all of how that client interacts with their money.
I mean, do you think there's one particular framework out there that works best for people, especially like physicians, high income earners, or do you think it really needs to be customized for the individual?
I think that there are high level concepts that can be applied to anybody's situation, but then everybody's situation is different. So for us, when we educate our clients, we say, first and foremost, we need to define your goals, because your goals need to be the lens for your financial decision making. But then with that in mind, clients that work with us, oftentimes they're coming because they want a non-traditional, more financial independence focused philosophy. And so we bring in a layer on this idea of, I personally think, and our advisors do as well, that prioritizing assets that are more flexible, that give you more control, that are either leverageable or allow your dollar to do more than one thing at the same time. We're going to take that philosophy and layer it on somebody's goals and say, hey, if you want to be financially independent by X, by X date with X amount of income, and if it's before 65, we're going to say, here's how we need to adjust your plan to be able to achieve those goals for you.
I think in this space, like, things have definitely changed. I think for the physician that's probably listening to this, I mean, you and I talk about this all the time. Like, the mindset has definitely changed in terms of goals. I think that the traditional way of being a doctor, thinking that you're going to just do one thing and you're going to have job security for life. You're going to be set. And at age 60, 65, you're going to be able to retire how you want, be healthy, and just enjoy the good life. I think that's definitely changed, at least in the way people see medicine and the way people see their futures. And maybe the pandemic had a lot to do with that. It made people rethink about all this stuff. I mean, is that what you're finding in terms of, you interact with so many doctors and physicians? Have you found, like, overall as a community, physicians as a mindset has kind of changed in that way?
I find that physicians, at least the ones that we interact with, and admittedly, a lot of those are in groups like yours that are already looking for something different than the traditional, but they come to us in a position of saying, we're realizing that we got our job, we did all the hard work, we put our head down, and then we thought that if we kept putting our head down and just kept working and saving and cramming money into our 401ks and our deferred comp plans, that we would be fine. And then somewhere in the midst of that, they looked up, realized that I'm actually pretty exhausted, but I don't have the resources to be able to reshape my life, to be able to slow down, to be able to do the things I need to do to continue to enjoy my job and have the impact I want to have, of why I got into medicine in the first place. So I'm seeing a movement, at least the clients that we interact with, of wanting something that is more flexible, that gives them more control to be able to have what we internally call work optionality. The money that gives them the flexibility to cut down their hours, enjoy their job, feel like it's full of purpose versus being trapped in it.
Can you share some, I don't know if you want to call them applications or different asset classes or vehicles that you've been able to integrate, into a plan like this that has created some of that for some of your clients or people? I'm just curious as to if we can get a little bit even more specific on what some of those things are.
Absolutely. And naturally, I mean, all of these asset classes, just for the purposes of this, anybody who listens to this is, different for everybody's situation, but on a broad scope, something we educate our clients with internally once they have the building blocks in place is how to understand the different alternatives and how there are some that are both active or passive, and within that structure, the different types. So active real estate, I mean, you along with a lot of the clients we work with are people who are either managing syndications or getting into short-term rentals, actively managing different types of real estate. That's one version of that we either have some internal resources that if somebody wants to do that passively, we have some companies we've vetted, but then a lot of our clients want to do that actively because it's either a hobby or there's some extra tax benefits for doing that. While I would argue that me and our team are kind of experts in the alternative space and including pieces of real estate, my active investment has always been my business. So all of my alternatives personally are ones that need to have as little time requirement as possible. So I've prioritized whether that's syndications and partnerships or different versions of private lending, found micro lending. You've been exploring oil and gas as an investment and the pros and cons there and the risks associated with that. But those are all things that, depending on somebody's situation and goals, and if they want to be active or passive, have tax benefits, or higher income, that we would come in and we would talk about as it doesn't make sense to layer this in to your plan to create that financial flexibility.
Not all financial advice is created equal. Some firms give you a one-size-fits-all plan and expect it to fit into your life. Now, Waystone Advisors takes a different approach. They're a full-service financial planning firm, but what really sets them apart is how closely they work with you to build a strategy around your actual goals. Not just retirement timelines or investment returns, although they handle those too. They help you answer the bigger questions, like what are you building? What kind of life do you want? And how can your money support that? The name Waystone comes from an old trail marker travelers used to follow. It meant you were headed in the right direction and moving closer to where you truly wanted to go. And that's how Waystone sees their role. Not just giving advice, but walking with you as your life evolves and helping you adjust course when you need to. You can learn more at waystoneadvisors.com. That's Waystone, Waystone, advisors.com. What if you could catch PIMD Con, the Physician Real Estate and Entrepreneurship Conference, without booking a flight? The PIMD Con 2025 virtual ticket lets you join live from anywhere. Grab your friends, your team, or colleagues, and experience the event together from wherever you are. You'll earn CME, watch every featured session via live stream, and get lifetime access to the recording so you can rewatch anytime. You'll also get access to our vetted sponsors and partners online. So if you decide to act on an idea, you know exactly who can help you put it into practice. Now, after the conference, we're going to keep it going with PIMD Con Encore Nights, where I'll host small group breakouts, live speaker Q&As, and targeted networking, all done virtually. So bring your questions, get real-time feedback, and leave with a plan you feel good about. And here's the fun part. You don't have to experience it all alone. Now, invite your friends, your team, or colleagues to join you online and save up to 50% with group ticket discounts. Now, we've packed this year's agenda, and I couldn't be more excited. So if travel's not in the cards for you, I get it, but I still want you there. The virtual ticket really is the next best thing to being in the room. So grab your virtual ticket at PIMDcon.com. That's PIMDCON.com. See you online. Now back to the show. Yeah, I'm assuming that most people, when they're doing this, they're looking for cash flow. Am I right on that?
I tend to think so. It's oftentimes we'll find that, not just doctors, but high income earners, sometimes they'll initially start by chasing tax deductions, but then realize that what they actually wanted was cash flow that allowed them to be able to replace their need to provide all the income to cover their bills. So it's a bit of a journey, and for us, sometimes trying to figure out that combination, but ultimately cash flow is what gives you the ability to replace your need to work.
I mean, tell me like a principle that you think, again, for people that are listening to this, like maybe what's a principle, or I guess a well-known or conventional financial kind of advice that somebody might get that you think is probably like a little misunderstood, or maybe, I don't know, and maybe even in some ways harmful, I guess. But maybe instead of that, there is a principle or something that they should be living by. I'm sure, again, in your non-traditional world, you talk a lot about that, right? So is there anything like that you might want to share with people?
Yeah, absolutely. Everybody's situation is different. So every financial tool, has its pros and cons and benefits, but and this won't be a surprise to anybody who's gotten this far in this conversation with us. But I would tend to think that the rule of thumb of, hey, follow the common wisdom is a potentially dangerous set of kind of default advice for people. And by the common wisdom, I'd really characterize that as traditional planning. It's particularly the high income earner space, whether that's doctors or tech or business owners, people that are making good money. If the primary savings vehicle is traditional retirement accounts, if it's prioritizing tax deferral and putting money in places where it's locked up and doesn't allow you to be as flexible, as financially independent as soon as possible, that's actually one of the biggest issues we found is so many of those high income earners we work with show up to us actually having a really large paper net worth statement, but still feeling trapped because their money wasn't saved in places that create the freedom they're looking for.
Yeah, and I think a lot of people listening to this can relate to that. I mean, again, probably the early career physicians don't feel like they have a lot of paper net worth, but eventually you start working hard, you start saving, you start building, and you might have that net worth in some ways, but maybe a lot of it's trapped in your home or equity, or again, in some of these retirement accounts, you can't get money out, but they feel like they're still kind of, going on this hamster wheel. And it's going faster and faster. And that's what I find a lot of people. So I think that piece of advice that you're sharing, it's like absolutely true. Now, I'm just, especially in today's world, like it seems like the financial markets and the economy, like nobody knows exactly where we're going. There's times where there's certain things you hear, like, just to keep this contemporary, like we just heard inflation was really, really low, the last indicator. But then some people really worried about, where should interest rates be? And then, of course, what's going to happen with the economy? Is there going to be a recession? And so there's always this fear of like, having the ups and downs and the uncertainty of that. Like when you work with clients and you work with people, even with your own investment, like how do you make sure that you build out this portfolio that's like really resilient, right? That is whether it's in the good times or bad times, you're not sitting there completely stressed about it. And so how do you build something like that out?
Yeah, this is going to sound like a really basic answer, but the best way to do it is diversification. And now I would probably layer in non-traditional diversification. So most advisors or people that are, when they hear diversification, oftentimes they think about, oh yeah, in my 401k, I don't just have stocks, I have multiple stocks and I have ETFs and mutual funds and bonds and things that, I've, international. And for me, that's diversification, but it's only within your market-based assets. But a good portfolio, a good financial plan is having comprehensive plan-centric diversification. So that's where having money that's in the market, but then perhaps layering in some alternative assets like we've been talking about, the real estate, the private lending, those other things. Perhaps having some money in emerging reserves. For those who aren't familiar with it, potentially layering in certain types of life insurance that are accessible, that you can access tax-free. For me, I actually, I have money in the market, in insurance cash values, obviously money in alternatives. I also have layers of lines of credit personally. And depending on someone's comfortability with using debt as a tool, which is one of the things we teach and educate for our clients, being in a position where if the market goes up and down, or if inflation goes up or interest rates change, if we have assets that are growing in different ways, that are impacted differently, and then we have lines of credit or assets that can be accessed without penalties, that gives us the dry powder, if you will, to be able to find a way to thrive and manage any uncertainty that the global economy could bring.
I mean, how do you decide then, or how do people decide whether they're doing this on their own or again working with you, like how to allocate, like when it comes to, they know they want to diversify, they want to know this, but sometimes the question that I get a lot is, well, how do you know how much to put into it? How do you know how to diversify? And how do you, in terms of allocation? So how do you work with people to figure that out?
I admit that there isn't really an easy rule of thumb for that, at least in the non-traditional space. That's where the first piece to be able to answer that question is being able to firmly define your goals, where you're trying to go. Someone who wants to be financially independent in 5 years is going to have a different plan and structure than somebody who wants it in 20 years, right? Someone who's burnt out and says, I need income so that I can cut my hours down last week. We're going to design their plan a little bit differently than somebody who says, I want to be financially independent, but I'm not burnt out. I'm enjoying my job and I plan on doing it indefinitely. So I'd say first and foremost, defining your goals, figuring out where you're trying to go is important. And then from there, looking at and saying, okay, what kind of protections do we need for my families, for my business, to make sure the plan continues to be in place? And then looking around and saying, do I have money that's tax-free and tax deferred? And do I have money that is, that benefits when interest rates go up? And, am I diversified? So there isn't a specific approach to that. But the first step is always going to be define your goals and know where you're going.
Have you noticed that some of your goals, or where you're going, has that changed over the last, decade plus of, being in this space and industry, and even just for you personally?
Yeah. For me personally, absolutely. I think it was about 5-6 years ago, we hit the point where, just following my own philosophy, I had enough money that if I were to look around and sell the business and sail off into the sunset, like we were functionally financially independent. And that was the point for me where I realized, now I can actually lean into building this business, having a bigger impact, but that also changes where I put my money. Because if I want to continue to create more cash flow, build assets that are flexible, that I can reinvest into the business, continue to scale up, that's a higher priority to me than deferring taxes in the future. I'm prioritizing flexibility to be able to continue to build and expand on what we've already been doing.
And so has that also shaped the way that you, I guess, advise people on it as well?
I think as well. I'd say my personal experience. So it's it is helpful to be able to somebody comes in, I can tell my story. And naturally, yeah, at this point, we have the benefit of, I think, dozens, if not hundreds of client stories of feeling that financial flexibility, and some of which, even experiencing financial independence. But being able to say, I've done this, here's why, here's the impact it's created on me by prioritizing a philosophy of flexibility and leverage and control and cash flow. I find that most high income earners really resonate with that, because they, so many, including a lot of the doctors that we work with, didn't realize that there was another way to build wealth other than putting money to their 401ks and hoping they had enough when they were 60.
Now, when you started this business, could you have imagined that you'd be now in like over 40 states? You're working with all of these people. You built out this huge team. I'm just curious, like, your thoughts on that.
I mean, I regularly comment to my wife, to our team, of just like, man, what is, like, the last decade has been wild, the decade plus. I'm so excited to see what the next decade has in store. I mean, the last decade, naturally, built to 40 plus states, 15 employees. I have, 4 kids. This year, my wife and I will be celebrating our 14 year wedding anniversary. So there's just been so much life packed into those last, 10 to 14 years. I mean, our hope is to radically increase our impact and get to the point where we're in all 50 states and helping thousands of people. So yeah, and it's being a part of communities like you, with you, is part of how we get in front of people that we can really help.
That's awesome. I mean, considering everything, I mean, again, sometimes it's easy to pile in on some of the negativity, especially going on in the world today. And, even with the uncertainty around economics and all that. But how do you feel overall about the way finances are, at least for high income earners that are, obviously active and learning and building communities? Like, how do you feel in terms of the future for, like, I guess, our community when it comes to thinking about finances?
Yeah, I think there's a lot of hope with our community. I mean, with whether it's United States, global, whether it's doctors in particular, with a lot of the doctors that we interact with, and this is what really gets us excited about continuing to help with a lot of those doctors, is the communities that we're a part of, as they start to experience that financial flexibility, that kind of work optionality that we've talked about. We found that so many of those doctors actually realize that, man, I'm not actually trying to escape medicine. I'm trying to be able to enjoy it more. And we're excited about the potential for having, doctors that feel financially free to be able to reshape the identity of the of the medical industry. And part of that is us being able to come alongside and teach people, how do we invest in ways to give you more flexibility, allow your money to grow, create that cash flow we talked about, that creates the freedom to really dive into, what's my purpose, as opposed to just trying to survive.
That's awesome. I know some people are going to hear this stuff, and again, obviously it resonates with me, preaching to the choir for me, but I'm sure some people are going to hear this. They're going to want to connect with you in some way. Like, what's the best way to do that?
Yeah, the easiest way is typically to go to our website, it's waystoneadvisors.com. You can also email our team directly at info@waystoneadvisors.com. And we have our client advocate team. They'll reach out directly and they'll coordinate anybody who's interested to have a complimentary discovery meeting with one of our lead onboarding advisors to talk about wealth design, and is this a good fit?
I always like to leave people with a final thought or an idea. Like, what's one thing, if they forgot everything that you just said, if they could walk away with one key point that you would love for them to remember from this, or it could be something new, but what's one thought that you want them to walk away with?
One thought that they could walk away with, I'd say for this conversation, to really summarize it, is that there is a different way than they've been taught that can create more financial flexibility than they thought they could have. And there's a path towards creating financial independence, and it could be closer than they thought it was.
That's awesome. I think everyone can relate to that. Well, also, I want to say thank you for taking the time. It's always good talking to you. I always like pushing you on the non-traditional stuff, because I always want to come up, every time I talk to you, I come up with new ideas. There are new things that you're exploring. We trade in terms of what we're sharing in terms of knowledge. And I love that about you. And so, and the way you think is very, very, again, it's very parallel to what way we think at PIMD. So I just want to thank you for your time. I'm excited to see you at PIMD Con. If anybody's listening to this is going to be there, you're going to see Austin, get to connect with him personally. I just want to say thank you for your time, and let's talk again soon. Okay?
That was great. Thanks, Peter. Appreciate it.
All right. Thanks, everyone. I'm going to go ahead and read a disclosure that we have to read at the end of this podcast. Waystone Advisors, LLC, otherwise known as Waystone Advisors, is a registered investment advisor, RIA, with the U.S. Securities and Exchange Commission, SEC. Waystone Advisors provides investment, advisory, and related services for clients nationally. There are risks associated with investing in real assets and the real asset sector, including real estate, precious metals, and natural resources. Investments can be significantly affected by events related to these industry. For additional information, please visit their website at www.waystoneadvisors.com to check out more. All right. Well, thanks again, Austin. Appreciate your time.
Thank you.
Bye.
Enjoy the show? Let me know by dropping a review in the podcast app you're listening to us in. And if you haven't already, make sure to hit subscribe. Join thousands of physicians who are also on this journey to creating their ideal lives through multiple streams of income. Learn more at our website, passiveincomemd.com. Thanks again for allowing me to be a part of your journey. See you next time.